Sheesh, things are getting crazy out here in the Miami-Dade real estate market, but don't worry because I am here to cut through all of the mainstream news, noise, and BS to give you guys the facts, the data, straight from the MLS so that you can make the most informed and educated decision possible no matter what it is that you're trying to do in Miami real estate. So pay attention because you need to know this data. Jake Fletcher here with the Fletcher Group at eXp Realty, and if you guys have any questions about anything in this video, or if you'd like more help with the Miami-Dade real estate market from a certified expert in the area, all my contact info is down below. Reach out to me anytime and I'd love to help you out. Right after you help out the like button with a quick little smash for the YouTube algorithms. So guys, we're going over all kinds of data in this video. I mean, it's action-packed, it's jam-packed. We have so much stuff to talk about. So let's jump right in so that you guys can make the best decisions for you and your family and really take advantage of this market and know what you need to do, whether you're a buyer, seller, investor, it doesn't matter. This is the video that you need. Check it out. Let's go ahead and jump into the data. And this is the first thing that we're going to be looking at here is the list price, median list price versus median sale price, okay? We're looking at all property types. This is Miami-Dade, and we're looking from January of 2020 until July of 2022, which is right now when I'm filming this video. So what I want to point out with this graph real quick, again, all property types, you see median sale price in the blue, median list price in the green. Right here around this January mark, we see a bigger divergence, meaning a bigger space between these two factors than we were seeing in the last couple of years, right? Median sale price was a lot closer to what the median list price was over the last couple of years when there was a lot more competition in the market. Now there's a little bit less competition. We're starting to see that people are getting properties for, you know, a little bit less on median than they were over the last couple of years compared to the median list price, okay? Hopefully that makes sense. If it doesn't, let me know in the comments and I'll, explain a little bit further. Now, the next thing that we're looking at here is just the condos and townhomes. So same statistic, but just condos and townhomes. So what we see here, same thing, right around that January point. It took a little bit longer, but we still see that same divergence, that same bigger difference. Now over here, this is when like things were crazy. COVID was like, oh my gosh, is this Armageddon, right? So this is a little bit of an outlier. Don't pay attention to that side of the graph as much. But what we see here is the same thing we saw on the graph for all property types, very, very close as far as the median price and the median sale price and the median list price. And then we see a bigger divergence here in more recent months. Now let's look at just single family homes. Now this is crazy because look how freaking close this is. This was like at parity right here back in like August of 2021, the median list price was the same as the median sale price. But then we see again, January, keep that January in mind because we're going to talk about it again here in this video. We see a bigger divergence. You see that huge space in between what people are asking for versus what people are getting, okay? Now, let's keep it rolling. Next thing here we want to talk about is the number of sales in the blue line versus the active number of listings in the green line there. So we see over the last couple of years, down, active number of listings was like plummeting into the core of the earth until about April of this year. And then we see, boom, a big pop up. Now this is all property types again, keep in mind, we're going to keep that flow of like all property types, condos, and then single family homes, just so you guys know. And then what we see in the blue line here, number of sales, we see, it was like a feeding frenzy, man. People were going crazy buying everything, right? And then the since about March, we see a big decline, a steady decline, not a sharp one, but a very, very significant one. And then right here, what we see from June to July, this big drop off right here. Sales are a lagging indicator, meaning things that are selling now were under contract 30 to 45, maybe even 60 days ago, right? And we're also not fully through with the month of July. But we're about 2/3 of the way through the month. So what we can do is we can extrapolate this data point, and it's very important because what it shows us is that we're probably going to end July with about 6,300 total number of sales, which is significant because that's about 60% of what we had last month, where you can see it was around 10,000 sales. So this isn't going to be as sharp of a decline at the end of July. July, but it is going to be a significant decline and a much sharper one than what we've seen since March to June, okay? So significant and notable, so keep that in mind. And here's the data to back that up. You can see down here, right now we're about 4,000 closed sales in July. And you can see here that was about 10,400 from the month earlier. And, like I said, this is probably going to end somewhere around 6,000, 6,300, somewhere around there. And what we can also see is since April of this year, we've seen the average, or not the average, the total active number of listings, also known as housing supply, we've seen that increase steadily until now in July, right? We're right around 30,000, which is where we were back in October of 2021 when we had multiple months of continued declines in inventory, okay? So in that, looking like about 6 or 7 months right there, we've made up those gains in just 3 months, which is pretty crazy, like 3-4 months, almost 4 months. All right, so next thing, we're looking at the same graph as far as number of active listings and number of sales, but we're just looking at condos, okay? So we see the same thing, going through the floor as far as the active number of listings. There was no inventory right up until April, and then we've seen a steady incline. And similar to all property types, we saw right around June, we see still an incline, but a leveling off of the incline. Definitely nowhere near as steep of an incline as what we saw since April. And then again, in the number of sales, we saw a number of sales going down since March, and then from June to July, we are seeing that also expected significant decrease in the number of sales. So let's look at just single family homes. This is crazy, okay? Now this graph actually surprised me because what we see here is, same thing, active number of listings versus number of sales. And what we see is that right around that April point, we had a gigantic increase in inventory, and we're still seeing a much bigger increase in inventory than if you look at condos, right? So condos and townhomes, we're not seeing as drastic of an increase in inventory. Single family homes, we're seeing, man, that's a big difference right there in the last month compared to in the condo sector. Now, what is also surprising about this specific graph dealing with just single family homes is that we see this difference from about 11,000 to about 15,000 units of inventory is a much bigger percentage difference than what we see here in condos, where we went from about 13,500 to about 15,000. Okay, so that's a difference of about 2,500 versus over here in single family homes, we had almost a 5,000, like 4,000 and change increase in inventory. So much bigger increase in inventory in the single family home sector. So if you're looking to buy a single family home, guess what? You have a lot more options right now. Same thing we see in number of sales as we saw in the last two graphs. We see a big drop off. We're expecting sales to be much less at the end of July. And if you want to confirm whether that's the case, make sure you hit subscribe and ring the notification bell, because I'll definitely be bringing you that information. So this is an interesting one. This is coming from Mortgage News Daily right here. This is the 30-year fixed rate mortgage. And you can see right here, remember how I said keep an eye on the January thing? Right here you see how since January, interest rates have gone crazy, okay? Now, if you're wondering what the different lines are here, you have the orange line is Freddie Mac, okay? The blue line is Mortgage News Daily, and the gray line is the MBA, or the Mortgage Bankers Association. So 3 different entities giving us their perspective, their data on the same data point of the 30-year fixed rate mortgage. So, but you can see, like, back about a year ago here in July, August, we were under 3%. Now we're just under 6%. Like, we're right at about like 5.69% today as I'm filming this on Thursday, July 21st. So very significant change in interest rates happened right around that January point of earlier this year. Now, I say that to keep in mind because check these apples out. Look what happened in January of 2022 on this graph. So we're looking at closed price to original price ratio, which is the percentage difference between what the original list price was of a property versus what the closed price or the sale price was, okay? And then days on market, the average days on market is the blue line, okay? So on the green line here, that closed price to original price, we see, throughout the last couple of years, we went from around 95% to 96 to 97 to 98 to 99, and then, flirted around with that 99% until January. It looks like people freaking scrambled to try to take advantage of the last little second of lowish rates, right? And then boom, we're seeing that people are getting 100% close price to original price ratio in the last 5 months or so here, which is pretty freaking interesting because we're seeing more inventory, we're seeing less sales, but we're seeing that sellers are getting closer to their original price than they were previously, which is actually pretty surprising, okay? Now, looking at the days on market, what have they done for all property types here in Miami-Dade? Well, the days on market have just gone crazy downwards, and that's all they've done for the last couple of years. It's just, houses are sitting on the market less and less time, okay? So right now, we're at about, 35-ish days on market, whereas a year ago, in July of 2021, we were sitting at about 70 days on market. So we're about half of the days on market for average for all property types. So let's look at just the condos, okay? We see similar graph, looks very like a very similar graph, right? The closed price to original price ratio, boom, getting right up into that 100 percentile back in looks like March of this year. Same thing with our days on market on average. We've just seen them they were kind of stagnating a little bit sideways, a little bit of an upward trajectory here in 2020 and then half of 2021, and then right around April, May of 2021, they went through the freaking floor, and then now we're right at that about 41-day mark for days on market, average days on market. Closed price to original price ratio, right? The same thing as before, went from about 94, 95, 96, 97, and then 98, 99, and then in recent months, it's just been 100%, right? Whatever you're listing it for, people are trying to buy it for that price, which again is kind of surprising because you would think with more inventory, less sales, aka less demand, that buyers would have a little bit more leeway, a little bit more negotiating room. So we'll see if that plays out in future months. Let's take a look at single family homes for the same thing. Okay, so for single family homes, what we're seeing, I'll zoom that in a little bit for you. Whoop, not that much. Same thing, closed price to original price in the green. Blue lines is days on market. We're seeing same thing, days on market going through the freaking floor. We're at like 24 days on market right here for single family homes, which is crazy, crazy quick, less than 1 month of inventory. Now, as far as closed price to original price ratio, we saw it get up to that 100% mark back in April of 2021, right? Maybe May of 2021, but pretty freaking close in April. And again, right around this January mark, we see boom, another jump up there. I mean, this was kind of fluctuating back and forth, but we see that January point as an inflection point, right? People are kind of scrambling. They're trying to get things closed quick. They're trying to rate lock and get their loans closed before rates go up again, okay? So we see, things getting off the market quicker. We see people willing to pay closer to that original list price than they were before, and that's kind of how the market is moving. So what does this mean if you're a buyer? Well, if you're a buyer, it's a really good time to get back out into the market because number one, you have a lot less competition because a lot of buyers have actually lost purchasing power or potentially even been priced out of the market. So you have less competition, and as we see, there's a lot more inventory than there was, and it looks like inventory is going to continue to increase. We might not be seeing as much of a crazy increase in inventory, but it's steadily increasing, and as sales continue to be low, you can bet your bottom dollar that we're going to see inventory increasing because as there's less sales, there's going to be more inventory, right? Because less of that inventory is being taken off the market. What does this mean if you're a seller? If you're a seller, it means the time is now, okay? Before interest rates go up even more, Fed's talking about a potential 100 basis point rate hike at the next meeting, which would equal about 1% increase of the bank-to-bank rate, which a lot of times that's going to result in an increase in mortgage rates as well. Not guaranteed. That's a topic for another video, but rates are going to continue going up, okay? So what I've been telling all, sellers, especially if you also need to buy, is The time is now. Get it sold now while more buyers have purchasing power. That means more people are actually putting bids on your house, and before potentially sale prices start to decline, because as we continue to see less sales, as we continue to see more inventory, eventually we're going to hit an inflection point where we're going to start to see median sale prices decline, because there's just not going to be the same amount of demand to result in that higher and higher median sale price, okay? So if you're a seller, strike while the iron's hot right now, while there's still more buyers in the market, before rates go up even more and things get even stickier. Don't even get me started on if we start to see massive unemployment. If we start to see massive unemployment in this economy, then things are going to get really crazy. But again, topic for another video. If you're a seller, you need to get on the market ASAP. I can help you with that. All my info is down below. If you're in Miami-Dade or South Broward, definitely give me a call, reach out, etc. But also too, if you're a seller who needs to sell in order to buy, keep in mind that right now things are less competitive. So you might be able to get an offer accepted on a home with it's contingent on the sale of your current house. As long as that current house, as long as you're like under contract and things are looking solid with that deal, it's now become a lot more possible to get under contract for a new home that you need to sell your first home on in order to buy that next home. So you have more options as a buyer now, especially if you're in a position where you're also a seller. So, those are my thoughts. If you're an investor, get your war chest ready. It's about to be game time. I've already been in contact with a lot of my investors. We're looking at properties. We're looking at stuff for short-term rentals. We're looking at stuff for long-term rentals. We're looking at major acquisitions of condominium buildings, of residential multifamilies, all of that good stuff. So get your war chest ready, because we're going to continue to see inventory increase, as I've indicated. We're going to continue to see sales low because buyers have lost purchasing power. There's less buyers in the market. So what do you think is going to happen, right? When sales decrease, when demand decreases and supply increases, economics 101, people, prices only have one direction to go, and that's down. It's just a question of how much does it go down. And also too, like I said, unemployment's going to play a big factor in that. Unemployment's low right now, but what happens after, a lot of major corporations have to, have earnings recessions and things like that, where they're going to have to cut their costs to level out their balance sheets for their shareholders? Well, the best way to save money as a company is in payroll, aka layoffs. It sucks, but it's the truth, right? So we need to be educated. We need to be aware. We need to be keeping our eyes on these things so that we know when we see, oh my gosh, unemployment's ticking up, let's get ready to jump into this housing market, because people are going to need to sell, okay? So good thing is, I don't think we're going to see a crash. We're not going to see, that's not going to be the economic problem this time around, because people have tremendous equity in their homes. So I think it's going to be more of like a multi-year trickle down of, who knows what the percentage will be. I think in Miami-Dade, it's going to be a lot less, like I've said in previous videos, than in other markets. Like if we have a 20% decrease nationwide with median sale prices, then we'll see like a 10% decrease in Miami-Dade. So those are my thoughts. Let me know what you guys think down in the comments below. Also, let me know, I'm really interested to hear if there's other types of videos that you guys would like me to make. I know I've had comments from people asking me what I think about the rental market or what I think about this and that. So let me know in the comments what type of video that you guys want to hear, and I will definitely do my best to try to bring you guys that information. But that being said, if you guys do need any help whatsoever in the Miami-Dade real estate market, again, all my contact info is down below. Leave me a comment, shoot me a DM, send me a text, send me an email, carrier pigeon, whatever it is that you want to do, and I'd love to help you out. And until next time, I hope you guys keep on winning and take care. Peace.